Okay, so what kind of situation do we have at the moment on NZD USD from a weekly perspective? Now, on the weekly time frame, clearly we have a market that has previous support here, again support here, and all this support is now turned resistance at this area. Now, as we can see with the last weekly candle, the market has created this candle here with a very long wick. And as you know, I spoke about this many times. If you have a candle like this, you expect the next one to fill in the wick. And that is exactly what this weekly candle, the last weekly candle trading week that we had, actually did fill in almost all the wick of the previous candle. So from a pattern perspective, we have impulse correction, and we want to see the next impulse to the downside, and we know that the market is approaching clear, very strong previous support, now turn resistance. Now, if we want to measure this retracement, what are we supposed to be doing? Taking our Fibonacci on the impulse. So taking our Fibonacci from the high to the low of this impulse. And what we can see, what we expect, in fact, what we can see is exactly the 0.786 creating a perfect confluence of resistance with the structure that we have. And that is something that you will see happening over and over and over again in the market. Fibonacci levels creating clear confluence areas with what you have from a structure point of view. Now, from a daily perspective, what we have on the daily time frame, we can clearly see that the market is moving in this channel. And if the market will manage to make this last move to the upside, we will have a perfect confluence of the resistance given by the upper band of the channel, the resistance given by the weekly structure that we just spoke about, and the resistance given by the 78.6 Fibonacci retracement from the weekly time frame that we have already spoke about. So a very clear, strong structure, basically a confluence of resistance inside of this zone. Now, if we go and see what is the situation from a COT perspective, so what hedge funds are doing on NZD. Now, if we check the COT data for NZD, what we're actually checking is NZD USD. Why we're actually checking NZD USD? Because all currencies on the spot are traded against the USD. So as I just said, if we check NZD, this is actually NZD USD. And what we can see from a hedge fund's perspective is that they have been adding both longs and shorts, which is exactly what you expect in this kind of situations. They're adding longs for the last move to the upside and adding shorts because they're already starting to building up their short positions so that then they only have to close out their longs at the maximum level possible for the maximum profit, and the actual push to the downside can start. So if we go back and see what is the situation from a price action perspective, how we will be approaching this with students. Very simply, we will be monitoring price action inside of this area if the market actually manages to reach it, and we will be waiting for the market to provide to us one of our valid entries inside of this area. So waiting on the 4-hour time frame for the market to shift from a bullish market to a bearish market and provide to us one of our valid entries, so that with students we will be taking a nice short with a very good risk to reward and very good probabilities for a nice move to the downside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.